Hey, this is David for BigBits, and in this video we're going to talk about how the CME futures have kind of changed trading for Bitcoin. And this is a fairly new thing to Bitcoin trading and crypto trading in general, in that there are these regulated futures contracts now that have their own data feed as opposed to the existing continuous 24/7, 365 trading like Bitcoin traditionally has had. These futures, they close at certain times on the weekends, and you can see there's gaps in these charts, and that produces different values on moving averages and other indicators as well. So today we're actually going to take a look at how the CME futures seem to be impacting trading on Bitcoin. So I'm going to go ahead and I'm going to remove myself from the video here so you don't have to look at me anymore. All right, excellent. Now, if you're not familiar, I have been making an indicator development series, and I've shown you all the steps to create this indicator. But we have an indicator with adjustable moving averages. We have the green line on both charts here is the 50 period simple moving average. The yellow line is the 100 period simple moving average, and the red line is the 200 period simple moving average. Now, on the left, this is the Coinbase chart for Bitcoin, and on the right is the CME futures price for Bitcoin. Now, the CME futures didn't start until, I believe, the end of 2017, and really didn't get going hugely until 2018. And there was an article we talked about on the channel the other day where it was believed that the Trump administration, or at least some of the people that he appointed, worked to introduce the futures or approve the regulations for the futures so that the bubble could be popped. So just keep that in mind. When they came out, Bitcoin was pretty much at its peak, and this is pretty much new data that we're working with over the last year and a half to 2 years now. So let's take a look and see what we can tell. First of all, let's take a look at the 50 period on these, and that would be just the green line. As you can tell, CME, the 50 period didn't really mean too much back here, although it did have a fake out here before the dump. This was also evident on the 50 period on the spot trades. Now, this is really not that big of a deal, but you'll notice that the 100 period moving average on the spot exchange that trades constantly, the 100 period moving average was the peak of that fake out, whereas over here there was still some room before it. Now, I know that this seems to be odd. This is kind of a new trend, but you can see that these different moving averages are catching at different locations. So here, for example, on the CME futures, you can see the 100 period moving average actually acted as resistance on a potential breakout here, whereas on the Bitcoin chart for Coinbase, it was well above the 100 period moving average. So this, to me, is just an example of where the CME futures are kind of changing the trading game. And you have people trading the CME futures charts, and you also have people trading the spot charts. And I think that's why we're going to see this going forward, is that you're going to have to pay attention to two different charts until they start lining up a little bit better. And I honestly don't know if they ever will, as long as there are the closures, and that introduces these gaps in the price. Now, let's move ahead forward, and we have our first big difference here is that we were well above the 100 on the Coinbase exchange, and we met it as resistance here. Now, this has also happened in other cases, and let's see where the CME has actually had a different impact. Let's go back to earlier this year in February. The 50 period on the CME acted as resistance all the way down here close to the bottom, but the 50 period was also resistance on the Coinbase exchange too. So either way you look at it this way, when it broke out above those, and it looked like it used the 100 and the 50 as support on the Coinbase exchange, whereas when it broke up here, there really wasn't much interaction other than it did find support on the 50 period moving average Well, I would say it found much better support. The candles approached the 50 period simple moving average on the CMEs much more so than they did here. If you'll notice the crosshairs on the screen, when I move the cursor, there's a horizontal and vertical crosshairs, and you'll notice here on the Coinbase chart, the candles don't quite get down there. And I'm not going to zoom in because I want the whole chart to be in perspective here. But they're not quite as close as the lines on the CME futures chart where it looks like the candles actually touch that line and bounce off of it. Now, keep in mind here, we have also crossed above the 100 period moving average. And something to keep in mind, let's take a look at here. No. Okay. The 100 period moving average, we are well above it here, which is a pretty bullish thing on the regular markets here. Now, let's look at the futures and see the difference here. We've been well above it, and we hold it as support, and we're going above it. But if you'll notice on the CME chart on the right, the price is below the 100-day moving average the entire time. But once it closes above that 100-day and broke free, it immediately goes to test the 200-day moving average on the CME contract. Okay? And price kind of flutters around here. There's a whole lot of stuff. There's a bunch of reasons why the price kind of slowed down here. But the first reaction it had on CME was to test that 200 line and bounce back and come back up to it. And then probably for other reasons it stayed around there. But you'll notice maybe, and maybe I'm the only one here that thinks this, but when I saw the initial huge jump in price directly over the 200 period moving average back in March of this year, I thought that it was kind of odd that we would jump straight over such a pivotal moving average on the Bitcoin charts, that 200-day moving average. We just blew right through it without even testing it as resistance, honestly. And after it had spent so much time beneath it, it really seemed kind of odd that it would do that. Now, when you look at the CME chart, you'll notice since the 200-day moving average was there on CME, maybe now that there's enough data on the CME charts, there's enough people trading it that is why it stopped out there and the price jumped, because it broke the 100 period and went pretty much immediately straight to the 200 period. Okay, so moving forward after that, we just had this kind of parabolic run up, and I think that had a lot to do with both of the charts at that point were above, the price was above on both charts, all of these critical moving averages. So the trend was obviously up, and it probably triggered a lot of different indicators to buy at that time. Now, going forward, we'll notice the 50 period moving average seems to have been worthless on Coinbase. The 100 period moving average perhaps acted as some sort of support here, although those wicks aren't really that well in line with it. And one thing to note, though, is that once the price went under the 200 period moving average here on the Coinbase exchange, it did act as resistance because the candles did close very close to that line. Even though there were wicks above it, it doesn't indicate necessarily how much of the trading was done above that line. So it did act as resistance, and price went down and popped straight back up when there was a death cross, which is supposedly a bearish indicator. It should have been, well, it is a lagging indicator, which the price has to be below in order for those averages to move down. So it was foreseen for a while, but this supposedly bearish indicator resulted in a huge spike in price, which, by the way, also kind of stopped out around that 100 period moving average. And we now have this huge intersection of moving averages on the Coinbase exchange that just seem kind of odd. Now, if you go back and you look at the CME chart, you'll notice the 100 period moving average was a brief stop here. It wasn't enough to hold. We were already in the middle of the breakdown. But up here, it also seemed to serve as resistance here. And once that started to happen, I think it might have been clear if you were trading on the CME chart that it was going to break down until you saw the breakout above that line. Now, once it did break below the 100 period moving average, you can see we did find some support, and not all the supports are based on moving averages, but we did see the 200 period on the Coinbase chart act as resistance. But on the other side of the spectrum, we saw the 200-day act as a critical, and I say that because there was a massive jump in the price once it found support here on the 200-day on the CME chart, and it jumped straight up to the 100-day on the CME, back down to the 50-day, which seems to be holding support. And it's interesting right now, and this is 10/31/2019, is that on this Halloween day, the 50 period moving average going down on the CME contracts seems to be holding as support on that chart, whereas the 200-day moving average moving up seems to be holding as some support on the Coinbase chart. Now let's zoom in. And let's see, I think that's about right. Yeah, so you can see there are wicks below on the 50 period on the CME, and there are also some wicks below on the 200 on the Coinbase chart. So it's pretty interesting. The 100 moving averages are fairly close. On this chart on the CME, it's closer to 10,000, where it's actually around 9,600 over here. You can see prices in a narrow region around many different moving averages. So it'll be interesting to see what happens in the future. Will the 200-day on the Coinbase chart make as much of an impact as the 200-day on the CME chart? But I think the biggest lesson here out of everything we've talked about is that the CME chart is starting to prove to be perhaps just as reliable, perhaps even more reliable than the 24/7 crypto exchange charts that we're looking at here. A lot of times people will look at Coinbase, or they'll look at BitMEX or Bitfinex or these other well-known crypto exchanges. But to me, the price seems to be reacting more so to the CME chart than it does on those other charts. So that's something to keep in mind going forward when you're looking at these charts. You might want to do something like I have here and pull up both charts in the same window. That way you can kind of get an idea of what's going on these larger time frames, such as the daily or the weekly as well. So I'm going to bring myself back into the picture here. All right. So I hope you all enjoyed this video. I think if you haven't seen this before, this was pretty big to me, just seeing this, because this is relatively new data. You might not have seen it before, and when I saw this for the first time, I was very intrigued, because it does seem like the CME is starting to play a bigger role in this. And of course, there is no actual trading advice here. I'm not telling you to buy or sell anything, but this is a pattern that is being noticed that you need to pay attention to, in my opinion. So if you like this video, please like. I developed these indicators, and there's actually a lot more to them here. Let's take a look. We've got all kinds of settings. You can change the period, the moving average type, the data source, the resolution of each moving average individually, and we also have crossovers. We have forecast and ribbons as well. So if you like that indicator, it's available on TradingView through my profile. You can find my scripts here that I've created. We've done quite a few already. There's also a video series here on YouTube, so subscribe to the channel if you like that. But for now, I think that's it. Everyone have a great day, and see you in the next one.